Exxon Mobil released their earnings and it's not looking too good for them. And one of the big signs of this is that they ended a 4-decade streak of raising their dividend. Now, Exxon Mobil's shareholders will still be receiving a dividend, but the fact that they didn't raise it, it's one of those signs that they want to preserve the dividend to not cause chaos because they are known as a dividend aristocrat. And a lot of people who do invest in a stock like Exxon Mobil do it for the dividend. So they didn't want to entirely cut it out, but not showing any type of growth, not even 1 cent movement from 87 cents per quarter to 88 cents per quarter shows that there is trouble brewing. And it's no surprise given the pandemic and fewer people driving cars. And some people may say, well, when things go back to normal, but we're eventually going to go back to normal, but there are going to be some differences. A lot more companies are announcing, Dropbox being one of the latest, that this remote working thing might be permanent. So more people are going to be working from home than ever before, which means less of a need for driving cars. Now, obviously, the car is not going to go extinct, and we are going to need oil and gas to put into those cars. And there is going to be I feel like it's going to be a very long time if it does ever get back to those pre-pandemic levels, just because of increased remote working. One of the things to note about ExxonMobil, though, is that they aren't really embracing the whole green and the future shift. So a lot of their competitors are starting to embrace it. ExxonMobil is really locked in on their oil, which can prove to be a mistake if you look at the picture decades out, with more Teslas on the road, electric being something that a lot of people in politics are really incentivizing. Like, it's not necessarily a good time to be big oil, especially when you look at the long-term horizon. Furthermore, ExxonMobil has a ton of debt that it has accumulated, over $46 billion in debt. And to combine with that, they have a 24% revenue drop. Now, again, this is just because of the pandemic. But it's not like ExxonMobil was a smooth sailing stock beforehand. And just to further emphasize this, Royal Dutch Shell, they actually beat earnings expectations and were able to raise their dividends by 4%. So while a lot of gas stations and that type of business is getting hurt, it's not like everybody is getting hurt in the same way ExxonMobil is in not being able to raise their dividend. A big part of this is that debt I mentioned earlier, and paying an increased dividend makes it even harder to pay off those types of expenses. Adding to the wound, ExxonMobil was recently kicked out of the Dow index, and because they got kicked out, a lot of passive investors all of a sudden no longer own the shares. So being in any of these indexes, and we know this based on the Tesla run-up, I feel like that just really emphasizes this very well. But when you get put into an index, people will suddenly buy millions of your shares just to fulfill the requirement of their indexes. But the moment you get kicked out, it happens in reverse. So Tesla shareholders raised up the price in part because of the split, in part because of Elon Musk, in part because they were hoping the stock would get listed in the index fund, and then all of a sudden all these institutional investors would have to pour into the stock. But since ExxonMobil got kicked out, now you have all these institutional investors and other passive investors who are just selling off their shares because they no longer are required to have them to keep pace with the Dow index. ExxonMobil has price to sales and price to book under 1, so some people may see it as a value opportunity, and they are still paying a dividend which is higher than what you're going to get from almost any other stock. But sustainability concerns, they're there because they didn't raise the dividend. It's not as big of a red flag as if they entirely cut the dividend, if they didn't pay it, but it is a forewarning because companies know that shareholders, especially a company like Exxon, where it's a dividend aristocrat, they know that their shareholders pay attention to the dividend. That's probably the main reason they keep on paying it, because the moment that they stop paying their dividend, they're no longer an income stock, which is very attractive for a certain group of people. And the moment they see Exxon drift away from that, they're going to sell their shares hard. And Exxon, again, not a big performer going into this pandemic. It's not like one of these stocks, like a cruise line, for instance, that had some growth going for it and then just absolutely tanked just because there's no cruise ships going out. This stock was going like choppy, but downward direction. And you do have the EVs, the electric vehicles, taking the road more. So there are a lot of concerns with this company. I think some people may see it for the value investor play. I'm going to stay away from this one. I feel like there are way more great opportunities, not just from a value investing standpoint, but overall return standpoint. Like, just because a stock gets beat up and the dividend yield goes up really high, and a lot of stocks that aren't called tech or aren't in that sector have been getting beat up, just because of that, that doesn't mean all of a sudden it's now a buy. Like, there's a lot of negative stuff swirling around Exxon Mobil. They did have to cut almost 2,000 jobs recently, and I think more of the pain is going to continue for that stock. Anyways, let me know what you think about this stock. I know a lot of people love it because it's a dividend aristocrat, but let me know your thoughts on ExxonMobil in the comments. Look forward to seeing you guys next time.